Hi traders, you're welcome to my channel. I am OT Josh, and right now I just took a 2 minute call trade to the upper direction because obviously the market is going to close above our entry point, and after this I am going to explain exactly why I am taking a 2 minute call trade to the upward direction. So this is going to end our video. I will take just this one trade, and I'll give a thorough explanation on why I took this trade, what I saw, what the candlestick told me about, and then what you should look out for. So let's just wait a bit. I'm going to pause it so this video is not going to take much of our time, and at the end I'm going to play it towards the end of the trade. Okay, this is the end of the expiration. So as we can see, we got that in the morning, but much more important is the reason behind this trade. So I'm going to start with this chart here. I'm going to explain each candle so we'll see what I saw and what I was looking at when I did this trade. Now let's start from here. From these two candlesticks, we can see that there is an engulfing going on between these two candlesticks, which shows what? Selling pressure, which is also a reversal. True or false? True. Now we're done with that. We had a reversal candlestick. This is the beginning of our story. Now after the reversal candlestick, what typically happens is that before now, buyers were coming in the market from this side. If you understand, from this side, buyers were in the market, and they got to a point where the reversal happened. Seller came in. Now, when seller came in, what is going to happen is that the previous buyers here, they are going to try their luck one more time. Now, when they try their luck and they failed, you find out that they will all leave the market at once, and sellers will continue to go in the market. Now, how did they try their luck? They tried their luck with who? With this guy here, this candlestick. Now, look at what happened. This is the closing price. So from here, buyers came in. At the same time, there is a key level of resistance. This is the round number here. Now, this resistance level acted as a round number for this candle as a key level. Now, when buyers came into this level, they encountered what? Selling pressure, because this candlestick has passed that place before. So there are remnants of sellers here who are still willing to buy because it's a good price. Now, the buyers were left heartbroken because the sellers came in. They tried again. Yes, they tried. How do I know that these buyers tried again? Because at the close of the candle, you can see their activities from this lower wick. Now, when they came with this lower wick, obviously this is now the trade to do a call. Sorry, yes, a put. Now, why do I say it's a put? Taking all this consideration that I've just mentioned, you can see that even the last time buyers entered the market, they were stronger than now when the buyers entered. So this alone is obvious that what? Buyers are weak. Now, for 1 minute, you can go with a put, but if you are a new trader, the best thing is to go for 2 minutes because of entry points. The best thing is to go for 3 minutes because of entry point. Because if you go for 1 minute, this is a huge candle now, but the candlestick can easily become like this one, whereby you enter the trade, the market goes down and then goes up again, so it will get you out of the money. You understand? So now let's continue. Now the candlestick, now the market now went down again. With who? What's happening? Okay. The market went down again with this guy here. Okay, let me make this. The market went down again with this guy, causing strong selling pressure. But here is the thing. In trading, there is always a high and low relative to the current price action. For instance, if this is the price action, there is always a high point and there is a low point. Generally, we buy at the lowest price and we sell at the highest price. So selling here makes here the high. But how do we identify the low? We identify that low through the use of the Bollinger Band. This is what the Bollinger Band tells us. Now, When you see a candlestick that is as strong as this, you don't expect this kind of candlestick next. You expect a downward movement, like you expect sellers coming inside the market with force. But to my surprise, I saw this candlestick here. Now, this candlestick is showing selling pressure, no doubt, but it's supposed to be something more significant, because if it's showing selling pressure in that place, obviously this now becomes buying pressure. This week here becomes buying pressure. And I told you something about the shaving head. Shaving head is always showing that there is a resistance or a support at this place. This is what shaving head is showing. So whenever you see a shaving head, just mark that place. You'll find out that it will act as a resistance and a support. For instance, this. Okay, one other thing you need to know, a strong candle like this, the middle of that candle will always act as a key level. The middle of any strong candle, this candle, it will always act. But that's by the way. Let's continue with our chart analysis. Now, when I saw this candlestick now, I had the mind that wow, the selling pressure is still in the market, but not as much as it should be, because there are some buyers here, right? So because selling pressure is still in the market, when price comes back to that level, I can do a put here and I will get myself in the money. So now I have done one trade, I have done two trades. So I'm going to wait to see what's going to happen next. Now, what happened next became what we anticipated, buying pressure. We saw this morning star pattern. Why is it a morning star? It's engulfing this previous two candlestick, so it's sort of a morning star pattern. So after the morning star pattern, it is now clear that the market wants to go up. When you get a reversal pattern, it doesn't mean it will go up immediately. There are still some remnants of the previous trend who will try to come into the market. You need to make sure that these guys are in the market and they are failing. You understand? This is the difference between a trend reversal and a trend continuation. That failure is what you should use to determine. Now, when the morning star came, it stopped at this area, right? Now, if you look at this candlestick, it came with selling pressure. Why did I say it came with selling pressure? Because if you look at this wick here, it represents seller's entry. Look at this wick, it represents buyer's entry. Now compare the size of the both wick. You will see that the seller's entry is much more stronger than what the buyer's entry. So therefore, you know that this candlestick represents sellers. But even though it represents sellers, I am not going to go with selling. You can go with a put trade here. It's okay if you go with a put trade there, but it's kind of risky. You understand? It's kind of risky to go with this one. So what you should do is to ignore, just let it go. Now, when this candlestick came and you see that the sellers are not as strong as the buyers. Why did I say the sellers are not as strong as the buyers? Not because the body is um it's because there is no even sellers could take market down here. This is also like a shaving head whereby it's showing that there is a resistance here. Therefore, you can go with this. You see, you can go with this candlestick. It's as simple as that. So when you go with this candlestick now, you've gotten your first trade once, first trade, your second trade, your third trade. Now you need to look for your fourth trade. Now, when you do that now, you see another what engulfing pattern, right? When you see this engulfing pattern, what you see now next is what this candlestick. Now, this is showing selling what pressure, just like this candle showed. But now, for selling pressure, for you to take advantage of this, you need to wait for price first of all to go up from here, to go up to this level. And at this level, you take a put trade for 1 minute. Number one. Number two, you also just like what happened here. Number two, you also need to take note of two pressures coming into the market at the same time, because previously buyers entered from here and this area has not been cleared. You see, selling pressure, it tried, but buyers came up again. So we can see that buyers could not come here for sellers to enter. Number one, sellers could not go down for buyers to enter. For sellers could not, buyers could not let sellers enter because some buyers are still here. So there is a fight between buyers and sellers. Now, when this candlestick shaving head is showing a what? A resistance level, we have a round number marked with this yellow line. With the next candle now closed below that round number. Therefore, this candlestick is supposed to be a put. Now, I didn't take this trade because I was skeptical because I have seen this fight here. I wanted to get a winner. When this candle is supposed to close as a red candle, it did not. It showed that this is a how do I call it? A dead doji. You understand? A dead doji because it's not showing green or red, it's neutral. So when I saw this, I knew that sellers failed because if sellers had not failed, this candlestick would have been a red candlestick. So at this point, what happened is that you can wait for this candlestick to come up, get a rejection, come down, sorry, get a rejection. When you see this downward movement, you see this sharp upward movement, you go with the put and you can have this with the call, you can have this in the money. Now you've done your fourth trade, you have to wait for a fifth trade. For the fifth trade, now what will you do? You have to wait for this reference point because this is a reference point. Now looking at this reference point, you get this, you have what? A candlestick that is supposed to show continuation of buying. Now, but this is now a dead doji once again. It shows that the buyers are kind of failing because if they were strong, it would have taken the market up. So to confirm that the buyers are kind of failing, we saw a shooting star. But this shooting star is not kind of enough. Well, it's enough to know because, like I told you, every shaving head pattern has a support and resistance. So I'm looking at this shaving head pattern. You can see this. I'm looking at this round number here too. You can see this. Now, when this after the shooting head, this green candle went up, got a rejection, then you know that since this candlestick has shown that buyers are failed, sellers will have to enter. So this rejection brought in sellers, and you can do this put here. Now, this rejection is a very strong rejection. This candlestick is a very strong candlestick pattern. All of this together we tell you that, and this wick is stronger than the lower wick. You see, this is like a 95% win rate to do a put with the next candle. Now coming back to the next candle, why I did my trade, I'll show you why I did my trade now. Now for my trade, you can see after this candle came back, it came back to this same level where sellers failed. So if sellers had failed here, this is showing buying pressure, right? Now the buying pressure, this candlestick here, with buying pressure, you can see that this candlestick has confirmed it. This is a buying wick. The wick of buyers are stronger compared to the wick of what? Sellers. Therefore, I went with 2 minutes and 1-2 I got myself in the morning. So you can see the process it takes to make your trade is not just by candlestick pattern, it's by the whole market and then using candlestick pattern as your last source of confirmation. You don't need any crossing of indicator. You don't need when this indicator crosses that indicator because you find out that when you do this, you find yourself blowing up accounts. So this is how you should analyze your chart. There are more to this, but I just thought I should for today do this quickly. So I want you to know also that I'm offering a mentorship program. If you need that program, you contact me with the description of this video in the email. You cannot afford the program, then you should be able to afford the ebook. You can buy the ebook at the description as well in my what's from my WhatsApp number. The link will be left in the description of this video is in other videos as well. So that is that. So after that, you see what happened here. Let me go back to that point. You see what happened. The market continued to go in the upper direction. You see how this doji failed. You see how this dead doji came up again. And after that, I told you about two hammers signaling a reversal. If you've watched my previous video, after this dead doji, which is the signal that buyers are weak, two hammers signaling a reversal, and it's happening where at a key level you can do a put trade here, and then you wait for your next signal. As the next signal is this three candlestick. in which they are showing buying pressure. You see this first candlestick where the wick is bigger than this one, the second one wick is bigger than this. This is a call trade. You understand? So this is another pattern. This one is showing shaving head, showing what that there is a support level here. So you can easily do a call trade here, but because it's at the two deviation, you need to be careful as well. So until next time, if you are new to the channel, please do well to like, share, and subscribe to this channel. Until next time, my friends, I wish you all safe trading and bye bye.